IVM.
Hey, this is Aditya from Shunya. So, if you're someone who plays poker, are mildly interested in it, or have never played it before, then here's a fun new podcast you can check out. It's the Spartan Poker's Mera Kaam Poker, hosted by Azim Banatwala and Peter Abraham. The show captures the fun side of poker and is a must-listen for everyone. New episodes out on the IVN Podcast website, app, or anywhere you listen to your podcasts. Hey, welcome to Shunya, guys. I'm your host, Aditya. I'm the founder of Hipcask, and you can find me on Twitter at Aditya. Welcome to the show. On with me today in the studio is Amit Doshi.
Hey, how are you guys?
Amit Doshi is obviously the founder and CEO of Indus Vox Media, and Amit is on Twitter at
Doshi Amit.
Great. So here with me in the studio today is our guest, Aditya Mishra. Welcome to the show, Aditya.
Good to be here, guys. Hello.
Yeah. So, Aditya, why don't you introduce yourself, where people can find you online, and then what you do?
Sure. So on Twitter, I'm Aditya Mishra.
I just got to say, the most boring group of Twitter handles ever. Sorry.
Yeah, just first names and last names.
Yeah.
Well, it's not easy, and I think Aditya would know that as well. Aditya is not an easy name to get a handle on anything.
Yeah.
Right? So I have weird Gmail IDs. I have weird everything. So on Twitter, I think I was among the first guys in Bombay to get onto Twitter, and still all I could get was the full name Aditya Mishra. So
Wow. No, so that exactly shows how tough such common names have it.
Yes,
Even though mine is not, mine's a weird Aditya name.
But it's still...
And yeah, it's
well,
still...
so the good thing about having a common name is you can get all the stuff with your name on it, right? So, it's ready-made, customized, it's there.
But before we get into the conversation, I want to introduce Aditya. Obviously you're the CEO and founder of SwitchMe, which is a very cool, interesting fintech company, which we're going to talk about. But I want to start with actually all the other experiences you've had. You've actually been a very corporate person in your past, and you've done very interesting, innovative things within that corporate space, which led to what SwitchMe is today. Plus, you're also a big contributor on the Mumbai startup ecosystem. You were the founder of Head Start, and I think most of us who've started up in the last 7 years have at some point interacted with the Head Start community, right? So why don't you tell us about the story so far?
So it's interesting. So a whole lot of people that I know on my corporate side, they think I'm very non-corporate. A whole lot of people that I know from startup side, they say, "Hey, okay, you were a TCS, so you are the corporate type." So yeah. I guess I don't exactly fit in either of them. But to go back, I think there is a place where both of them meet. So I think I've been interested in startups for a very long time. Going back to on campus, NS Raghavan Center was coming at IIM Bangalore. And this was the first incubator in the country. And I was in Bangalore in just after .com time. So I've seen that part, and I've always been interested to kind of do a startup since then. Then at TCS, one of the things I got tasked with was to create a innovation program, and one place where we were not doing anything, so that was the easy place to start with, was to go and work with startups all over the world. So my job was to go to Silicon Valley, other parts of the world, figure out which are the startups which could work with TCS, we could take it to our customers.
What year was this? Because I think the ecosystem here didn't exist so much.
This is 2005, 2006. This is way before that.
Yeah.
So this is so TCS has been kind of very forward thinking. Doesn't come out well in press because it's B2B. They don't care to be in press about this, but very forward thinking. So in 2005, they were thinking like that, and we ended up creating what TCS today calls their co-innovation system. So co-innovation network, COIN is the name that they came up with. So as we did that, we realized what you just said. There was no ecosystem in the country. And question was, what do we do here? So obviously we can't take startups to market because there were no startups. And particularly
hardly any market, which is well defined for them.
Well, the idea was to take to the market in US and Europe because TCS is very, very focused there.
Right.
Bulk of the business is there. So next thing was that, okay, let's encourage entrepreneurship. And that I think comes naturally for TCS and the leadership of TCS that, hey, we are part of India and we need to kind of contribute, right? That's part of the Tata ethos. So I started going around and looking at, hey, what's there? And we found something called Bar Camp had happened, and then after that it had died down. So I actually went around, spoke with the guys in Bangalore that, hey, we should revive this, and thankfully they were actually looking to revive this. So I found a team which was looking to do that, and that's how Bar Camp Bangalore 2 happened, and that's how that got revived. Same thing, I went to Delhi. Delhi again, I found a bunch of people who were kind of thinking of doing this. We revived that. Bombay, we said, okay, let's do it because I'm sitting here.
Right.
But that was much later. Pune again, we found that some people are looking to revive. So they were like little seedlings which were kind of coming out, and all that TCS essentially said that, look, it's going to cost us only a few lakh rupees, so okay, let's write checks, which allows people to kind of just get together. Much later, as it got going, TCS didn't see a point of kind of continue to contribute. Look, ecosystem has come up, so they kind of pulled back. But pretty much all these bar camps, a whole lot of events earlier, TCS would be one of the sponsors, so they kind of underwrote that. So I think bar camps got going, and as bar camps got going, they became large in size, particularly in Bangalore. And we found that the topics moved away from innovation and startups, which is what a whole lot of organizers wanted. And the organizer set also changed. So I think there were discussions around politics, there were discussions around dating, gender issues. While these were important, there was a one group which felt that, hey, there should be focus on startups. And that's where kind of germs of Head Start came up that, hey, let's do something which is different, let's do something not for profit. And I think it came down to one evening after one of the bar camps in Bangalore that I think we were sitting in Legends of Rock in Koramangala, and we were doing lots of bottoms up of beer. Somebody started saying that, hey, look at this, ecosystem doesn't exist. Now, this startup that I'm doing, if I was doing this in the Valley, or forget that, even in Europe, this would be funded. Hell, here is this company, which is very, very similar to what I'm doing. Right. Came up 6 months after when we started. They are funded, and since they're funded, they're doing well here. I hear every VC meets me and says, you know what, let's not do this. So the ecosystem doesn't exist. So that's how the conversation went, and it was not very different than many other conversations we had. There was like conversation full of like, okay, we are in the wrong place. One guy actually said that, you know what, we are entrepreneurs. We bring about change. The world looks to us to move us to the next thing. Here we are sitting cribbing. Let's do one thing. Either we shut up and say this is how the world is and this is how we will work with it, or let's just change this. Who else is going to change it? Government? So I think that's how Head Start started, and it's always been a volunteer-led kind of a movement. And the Head Start started as doing these annual events. Let's get everybody together, because the ecosystem at that time was so small that doing anything larger than kind of one annual event was a big problem.
Yeah.
Later, much later, we kind of moved to saying, okay, there are sufficient number of people, let's start doing something monthly. And that's how Startup Saturday was born. And I think the Head Start community has grown so big, there's a lot of volunteers who have actually made it happen. So there are so many Startup Saturdays happening. So I think last I checked, and I have not been active with Head Start, I think there were 20 plus Startup Saturdays happening in the country at one day.
Okay. It's amazing, yeah.
Because if you add it up, you're looking at like 2,000 people getting together.
Yeah.
Right? And it's a totally grassroots movement. And people don't talk about it. There's no newspaper coverage. There's no TV coverage. It's just people talking to people saying, hey,
but
you should come.
But it's well entrenched in the ecosystem, I would say, to this day and day.
Well, so I think the people who are part of the ecosystem, they like being there.
No, and that's the hallmark of the fact that, like you said, entrepreneurs did this for themselves. And it sort of snowballed into what it is today because everyone keeps, in a way, contributing in some way, either by participating, by volunteering, and you sort of kick-started that. So it's good to see that even then. Who were the other guys who you started this with, and like what were the germs of this entrepreneur community? Was it all corporate?
No, so I think I was the only corporate person. So there were a whole bunch of us. In fact, when we kind of sat down and said that, okay, who are the co-founders? I think the list went to 16 names.
Wow.
So there was a bunch of people, and there were a bunch of people that we wanted them on board, but didn't happen. So, for example, what our thinking was, hey, here is the leadership of Bar Camp and Mobile Mondays. These are two community-led events. Let's get all of them together. But several of them by that time had gotten busy. So, for example, Amit Ranjan in Delhi, he was the guy who was getting everything together, along with Prashant. Prashant got busy with Monsoon Multimedia. That was a startup he was very passionate about and working there. Amit got very, very busy with SlideShare. So they moved the business model, and once that took off, he had to be there.
Right.
But these were the two people who are making it happen there. And I think that's where in Delhi, we were very lucky to find much later Pankaj Jain, who came on board, and he started driving the Delhi community, and a team kind of formed around him. Similarly in Bombay, it was fairly lonely, just me and but then Arpit, who used to be part of the Bangalore team,
Correct, yeah.
he was here finishing his MBA at IIT Bombay, and that's where we were doing Mobile Mondays. We were doing bar camps at IIT, and that had led to a small team kind of forming. So we did the first, the second startup Saturday. First one happened in Bangalore. The second one happened here in Dadar. The Kohinoor Hall, right in front of Siddhivinath, right?
That.
Yeah, you remember that one?
I remember that one.
So that's where we started, and it was just Arpit, Netra, and me here in Bangalore. Amit has been there for a long time, and now he's kind of the leader running the entire show. Bunch of other people, so Akash, Vinayak, Kalol.
So it was essentially people who were still in a transitional state with their own, I would say, products and startups, right? It wasn't that there was never a very successful exited entrepreneur ecosystem already then anyway, which led to people just saying, hey, I want to give back to society. It was more like, hey, we want to help ourselves. It was that sort of the attitude which sort of germinated this, would you say?
So I think there were people in India who had done well in their entrepreneurial venture. I would not say exit, because exits were very few then, even fewer than it's today. And a whole lot of those people were not really part of anything, right? Yeah. Some of them were part of TIE. But I think our group was more like, okay, we don't really gel with that group, right? We are out to kind of change things. Happy to work with some of those guys, but not all of them. So, yeah, we were all dreamers. We were all saying, hey, tomorrow I'm going to do something. Today we were very clear. We haven't done anything.
Nice. No, in fact, I want to actually take a step back. And when you mentioned, just to pull back to your corporate roots one more time, when you were doing the initial days, right, of leading innovation within TCS also and looking at startups, what kind of startups were you seeing? Like even the ones you wanted to take to the valley, and I'm guessing you did take some to market, or you invested in some startups even as being as part of TCS. What were those companies like? And were those investments fruitful?
So I think there are two different phases. So I started out looking at investments, and hardly any of them really worked out. So I think there was one which was in mobile payments, among the very first one.
Amazing.
It still holds the patents but doesn't enforce the patents on that. If it started enforcing the patents, there will be a problem for a whole lot of them. But it has chosen not to. And I'm not sure TCS has disclosed that, so I'll leave it at that. So there was stuff in mobile. There was a company in Bangalore. There was a company in Ahmedabad. The Bangalore company has done decently well, but the Ahmedabad one, I don't think really anything came out.
These were all US focused or outside of India focused products.
So I think mobile ones were very, very focused in India because telecom revolution was already happening. Right. But I think everybody said that, look, while this is happening, bigger money is in US and in Europe. So for telecom, Europe was fairly big. So I think those were the ones that we did. Now, when it came to kind of doing a partnership with them and taking them to market, nothing from India.
Yeah.
And that essentially led us to the thesis that, look, there's nothing happening here and we need to kind of encourage that. And K. Anand Krishnan, who's still the CTO of the company, I mean, he gets the full credit saying, you know what, this is not going to amount to anything for us, but at the same time, expense-wise, it's not a big deal. So you know what, we'll just take a hit.
No, that's impressive to know that sort of the seeds of the ecosystem today were in corporate backgrounds like this. And I'm sure the other guys were also doing it. TCS is one example. I'm sure there were small corporate movements to work with the startup community even in every other company.
Yeah, I think there were
various levels.
Various levels. So, for example, there was participation from Infosys. There were folks who were at ACM and they were also thinking, so this is like more like 2008-9, that there should be a strong technology underpinning to kind of all the innovation that you're doing. So there were folks from IBM, there were folks from Infosys Research that were participants. And then there were people like, let's say, Sharad Sharma, who used to be at Yahoo at that time, who was fairly encouraging about what is going on. And later, of course, he stepped out and he's done a whole bunch of things otherwise as well. And I think a bunch of them essentially got the NASSCOM product conclave going. Used to be on the steering committee for the very first two ones. Very nicely curated. I think a lot of us remember those first two events very fondly. So there was a fair bit of large corporate kind of push that, hey, let's make this happen.
Yeah, and I think that we've had other folks from corporate backgrounds here as well, and we spoke about how while the push and initial push and the incubation to a certain extent even exists today, I mean, it's still there. It's, in fact, they've realized it's a force to reckon with and not ignore. That's why all corporates are investing a significant amount of their time and resources, I would say, towards working with startups. At the same time, do you think they are also being disrupted by them? I mean, that's what ultimately is what they are realizing. And while they are helping the ecosystem grow, are they always looking at things with their own lens? Is that a handicap a big corporation has? I mean, even like in the news this week was what? Aboff.com shut down because Aditya Birla is unable to run it as an e-commerce company, while the other guys who are in this space, the other big leading e-commerce giants, continue to power on. So did you ever think that there is a certain holding back also when it comes to being a corporate, that, hey, my core business is here, I can help the ecosystem, but I don't really know how to go all the way?
So I think the word disruption is something that gets thrown around a lot. It means different things to different people. And Clayton Christensen, who coined that thing, is, I think, still on the board of TCS. So I've had some interactions directly with him, and at least TCS as a company wants to do those disruptions to themselves rather than letting it happen to them. And that's one of the reasons why Clay is on their board. I think while disruption is a word that gets thrown around a lot, it means different things to different people, and different people react differently to it. I think it's exciting for a bunch of people who are entrepreneurs to say, hey, we are out to disrupt, right? That gets them excited, that gets them going.
It's motivating.
It's hugely motivating. And I think that's good. For a bunch of corporates who've not been looking at it, they react with fear that, okay, my business is going away. And it either kind of forces them to work with those startups or to do some stuff of their own. And I think that's also good. Then there are a bunch of people, and there are, I think, the smarter kind. They say, you know what, in the end, what difference does it make for my customer? And I've actually seen two kinds. One, people who know that my business is going to be in decline, let me milk it for cash and invest elsewhere. That's smart people who are doing that. Right. Will not name them because they don't want to be named. And there are other people who say that, hey, this is actually not going to make a difference to me. And therefore, just the way you are enthusiastic about it, well, I'm also very enthusiastic. You're not going to make a dent to me. For example, HDFC Bank, Mr. Aditya Puri has been very, very vocal about it, that look, Paytm is not going to make a dent to what we are doing. At the same time, there is something that's happening with Chiller. Right. So some of those things, I think people have taken different stances. So it's very difficult to kind of paint with the same brush and saying, okay, everybody is like this. But I think today there's a movement, and companies can't ignore it, and they really need to look at it. But fundamentally, the interesting thing is that Indian market itself is not so huge. Take it whichever way, are we anywhere near a US or a China? I think the bigger thing is how do you take something outside of India and attack larger markets, and how do you grow the market? I think those are things to kind of look at. For a small market, you're fighting for the same pie. I don't know.
When you say it's not big enough, is it across sectors? Do you think,
I think you mean money is low, right? I mean, like, even though people are high, market size is big in terms of pure numbers of customers on your the per person revenue that you can generate from an Indian customer is much lower than what you can generate from another. Is that what you mean?
Yes. So when you bring it down to a particular sector, you have to again look at what VCs would love to call addressable market, right? And that essentially means you need to have that discussion in context of a particular opportunity. But in general, what you will look at, there's this nice report that came out by one of the analysts, which essentially says that if you start comparing the Indian consumption pyramid, people who are earning, let's say, higher than $10,000 is only very small number, right? And a whole lot of services and a whole lot of products that we are talking about
are built for that.
Yeah, but that's a small market. Now, the next one, which is a huge market, the kind of purchasing power available to them is a whole lot smaller.
Right.
And that's where China was 10 years back. But today, they've kind of lifted a whole bunch of them to the upper
top bracket.
Right.
And unless that plays out, what are we talking about?
No, but if that doesn't play out, then everything is, then I mean, like revolution, man, blood in the streets. I mean, like, no joke, seriously, that's what will happen.
But again, just to contrast it with the roadmap of regular corporate strategy, regardless of what their product is, but just to contextualize again, retail versus e-commerce, right? The current retail giants still are doing what their last 10-year roadmap plan was I would say in roughly, right? They're going, okay, city, urban area, then tier 2, then tier 3, and that's how retail is growing.
Right.
Whereas e-commerce is coming and trying to, again, go across all the way and change that. But the pyramid of consumption which you just spoke about is the rest of India, which can't afford a bunch of these things which is being sold on e-commerce. Are they even ready for that? That's what I guess is, or do they have the same problems which China had and led to e-commerce
similar
growth?
Position to where China was 10, 15 years ago, right? In terms of where the market is and where we need it to be. So, I mean, like, you need income growth. I mean, like, you need this so-called jobless growth that we've been having right now is not sufficient. We need income growth. We need more people to be making more money. And, I mean, if that doesn't happen, then all the food tech and fintech in the world is not really going to matter. Yeah. We need, like, core growth from just core economic growth. So, I mean, that needs to be without that, everything else is kind of.
Yeah. So look back 10 years back, right? Or 15 years back. We are all old enough to kind of remember that time, right? Today we talk about Bangalore has a massive traffic problem, right? Bangalore didn't have a traffic problem then. Yeah. In fact, it was fairly idyllic then. Yeah. What has changed? A lot of money has come in through IT, right? Yeah. So there are a lot of people who are high earning compared to, let's say, rest of India, and that's what's fueled the growth for, let's say, a Gurgaon, a Noida, a Bangalore, a Hyderabad, and I think that has kind of driven that. But look, Indian IT services are not growing that fast. The incomes are not growing that fast. Yeah. Next thing that happened was, of course, retail happened. Right now, a lot of incomes are growing up actually in the segment which is, let's say, the cab drivers. Mm-hmm. Or let's say there are a bunch of people who are getting jobs as well, delivery boys. Now, that's where, let's say, some income boost is happening, right? And I think some of those needs to become a lot more widespread for this to kind of really become a large, meaningful number.
Yeah.
Yeah, I think that's what the crux of
Yeah,
any growth story is, and we'll have to see how it plays out. But before we get into a little bit more about core fintech, I think we're just going to take a break and come back and talk to you a bit more then.
Hi, I'm Amit Verma, the host of the weekly podcast The Seen and the Unseen. In my show, I examine the seen effects and the unintended consequences of public policy and private action. I show how policies meant to help the poor often end up hurting the poor. I've done episodes so far on demonetization, GST, surgical strikes, immigration and MRP. And I will continue my forensic assault on the truth in the weeks to come.
Catch the show every Monday on the IVM Podcast app or any other podcasting app that you prefer. Or visit seenunseen.in for all the latest updates.
Hey, welcome back, guys. So, obviously we went into a very interesting space of e-commerce and retail and economic growth. But leading on from that, I think one of the things which we do want to talk about, and which is also your startup, is in the space of fintech. Mm-hmm. And I think everyone listening to this show knows what fintech is now.
Actually, I don't think anybody knows what fintech is.
But they've heard the word.
Yeah, everybody's heard the word.
But in the last,
anybody can define it.
I don't think even 3 years ago people would have heard the word. I think the last 3 years have been like fintech in every newspaper article. But you actually started out almost 5 years ago.
Right.
And doing a very core fintech product. Why don't you tell me about what happened? Like, you were on the banking side in, again, a corporate sector, and then you moved into an opportunity which you saw. So what led to Switch Me?
So it's interesting. So I was selling to banks, and I could see that banks couldn't innovate even if their life depended upon. Why is that? They would essentially look at the business leaders coming up with the new ideas, or they will say, okay, let the tech guys come up with the new ideas. First of all, most bank tech people are not deep tech people. Right. They actually turn to a TCS or an Infosys for help on that. Second is that the tech is not out there looking at what the customer is doing. It's a branch which is doing that. Between the tech and the branch, there is a central processing center. Then you've got your ops leadership, operations leadership, and then comes the tech. So tech essentially treats the operations leadership as its customer, or the business function leaders as its leaders. Now, these guys are also not in the market. Now, If you're not studying your customer, if you're not trying to understand the needs, how are you going to innovate? So I think banks are constructed very well to manage risk, to kind of have high operational efficiency, and that stops them from being innovative. And if you look at it, banks in their structure haven't changed much from 90s. And
even before, maybe.
Well, I think 90s was an interesting sector. Citibank did a whole lot of interesting things. I mean, one very visible thing is ATM, right? Cards as a product also kind of took off, I think, more like 80s. So there has been innovation, but there has also been kind of the structure that just got fixed. Now let's just copy paste it, right? That's how every bank does it. And in India, I think there was a lot of innovation in terms of, okay, let's start one more bank. So a Yes Bank or a Kotak, these are, let's say, the newer entrants. So I think that's been happening. But going back, I don't think banks can innovate because they're just too far away from the customer.
And even today, I think a bank's thinking is, hey, let me get more market share. Or is it just trying to do more banking? Is that something which they were
So I think the bank speak is cross-sell, upsell, right?
Yeah,
so I've
exactly.
got one customer, I've got a savings account relationship with him. Now, how do I kind of leverage that very well? Yeah. And I think HDFC Bank does that very well. Other guys probably not so much, and everybody's saying, okay, how do I replicate that, what HDFC Bank has done? Right. And I think they're all smart people, and they're all trying hard. And if you look at their revenues, they look at profits, look at share prices, all have upward trends. But I think what has changed is that after the 2008 crisis, at least in US, there was massive deficit on the trust that people had on the banks. That allowed for P2P lending guys like Lending Club to come up and do very well. And they've continued to do very well. There has been some down part, but overall, I think they've changed things. And I think their expectation, therefore, is that, look, something should change. On the banking side, and particularly from a customer, look, everything's changing. We were talking about e-commerce earlier, right? How our entire experience has completely transformed there. Now on the banking side, not much. It's a
not
same.
In the last 15 years, yeah.
Yeah, not much.
For sure.
Yeah. I mean, there's like a mobile app, but look, it's just a net banking. You've realized the same thing.
It is.
Right? Payments, well, actually before UPI, it was Paytm which had come and done stuff, and not banks. So I think that's where there is this pent-up expectation. And I think there are startups who are saying, okay, let's do something about it. And I think the banks are saying that, you know what, let's not disrupt our business. Let a smart startup do that and we'll work with them. And I think that's what some banks are essentially doing.
I think that's actually the best of all worlds, isn't it? Right? I mean, like you have the conservative banks doing their conservative stuff. At the same time, they're willing and open to work with a lot of different startups.
It's also a function of regulation in the country, I believe.
As
like startups are forced to work with banks, by the way.
But do you not think that is... You seem to not agree with that.
So I agree with Shiladitya that, look, regulation protects you.
Right.
In other places, you could go and do things that are just not permitted in India because we've got a very, very strong regulator for good reasons. Yeah. And I think they're doing a good job, but that also means that pace of innovation is not what it could have been. So I think that's one. Second is that, look, while it seems like, okay, let me have the best of both worlds, sometimes that really doesn't matter. You need to put your skin in the game. So I don't think all banks are being very smart.
Okay.
What's a good strategy for one bank is a very bad strategy for someone else.
Okay.
And sometimes you're looking at something that you just can't even execute.
Right.
Because if you start looking at it, we've got so many banks in this country, right? Today the FM was talking about, hey, we got to consolidate, right? But fundamentally, if you have got so many banks working, because each one has got a pocket of strength. So here is this bank which is very, very good in this state, or let's say just few districts here, and so on and so forth. So I think there are strengths that are there, and the way things are structured, it's very difficult for even one bank to prey upon another. Forget a fintech coming in and saying, hey, let me do something. So that's where regulation plays a role. So
you think the regulation is anti-competitive?
Regulations are a lot like, okay, I'm going to determine the outcome. So today the regulator essentially goes down and even says stuff like where you can open a branch.
So they are anti-competitive. They are constraining competition in many ways, right? If the regulators are deciding where branches are to be, see, I don't know about this, so that's why I'm just kind of.
So if you were to ask a regulator, I think the answer would be something on the lines of, we are doing the right things because, for example, I'm forcing the cost of your check truncation to go down.
Right.
I am forcing things like, okay, you should be limitation on ATM fees. I am forcing a whole bunch of things which is consumer friendly, and this is in public interest. Now, while I'm doing that, I need to kind of compensate by doing other things.
Right.
So there are good reasons, at least in their perspective, of why they should be doing it. But obviously, different parties have different views. So people say, hey, you should not be regulating the fees. So in fact, there was this entire long tussle on this ATM fees bit. For some time, it was like, you can't charge fees. Now it's down to like 4 transactions or 5 transactions, right? After that, it has to be. Then branch licensing is something
sorry to interrupt, but isn't like something like ATM fees, right? I mean, like by regulating it, you're preventing the ability of banks to compete on that, right?
Yes, you are. Absolutely.
I feel like, someone like HDFC or Kotak who has a very big ATM network, if they say that, okay, we'll partner with this bank and their ATMs are free. I mean, like there are opportunities which are being kind of
stifled. Which is exactly what I said. That look, everybody has pockets of strength, and the regulation is stopping from one bank kind of intruding into others' area. Okay, you have strength in this village, this particular state, you can open more branches here, more ATMs here. Other places, okay, compensate. Then it comes down to things like priority sectors. So banks are supposed to lend a minimum amount to the priority sector, a certain percentage of a balance sheet. And if you don't, then there are penalties. And that applies to every bank in the country.
Wow.
Now, what that means is that these NBFCs that we see, in fact, including in fact some of the fintech players who are into lending, what they essentially do is that they lend from their books, but then they sell those by securitizing that to one of the large banks because, hey, there's a deficit on my balance sheet, I need those priority sectors. Now, that may get a little complex, but let's look at this way, that what the regulator is essentially saying is that if you open 10 branches in a rural area which is underpenetrated, I will allow you to open 5 in Bombay.
Yeah.
Right? I will not allow you to open only 10 in Bombay. Because then Bombay is overserved, high competition for that, top of the pyramid, but no service for the bottom of the pyramid. Right. So that's a balancing act that they are trying to do. And obviously it is anti-competitive in many ways.
And again, I mean, like, but at the same time, it is something that should, I mean, like, you know, we have a social imperative to ensure that these services are available across the country. So I guess they're doing what they have to do.
Yeah, they're doing what they have to do, but then it comes down who's to decide, right? And
yeah, and they're also playing by rules which are
antiquated.
More, yeah, exactly.
I'll say it.
So anyway, but coming back to what you saw as an opportunity, and I'm sure, like you said, all the stuff which you mentioned today is, it's equal parts opportunity, equal parts struggle because of the regulation. But overcoming that is what startups do best. And what did you see that is... and why did you choose what you're doing with SwitchMe 5 years ago and you continue to be in the same space while there is, I feel, when we talk about fintech or when we talk to founders of fintech here, there's a new flavor of the season every other month. So,
okay. Actually, you might want to lay out what SwitchMe does exactly for people who are not familiar with it.
Okay, so we make home loans easy. If you look at home loans, it's a complex product. It's usually the largest liability that you're carrying. If your house is your largest asset, this is the largest liability you have. And therefore, one of the largest and most important financial decisions that you make. What we essentially saw was that the process of taking a home loan is kind of broken. You do research and the research itself may give you unreliable results. That's one. And unreliable because whoever is giving you that information has its own incentive to distort that. So banks do not fully disclose their own charges. The intermediaries again hold back some of the things, or they don't even have the incentive to go and figure out things because what? Banks pay them to kind of do this, right? Therefore, one of the things that we wanted to do was an intermediary which charges the customer and says, you know what, I'm working for you. I'm not working for the banks, right? So that's one thing that was there. Second is that the process itself is so cumbersome, right? Now, if you go and talk to a bank, they will say, oh, okay, we do the home loan disbursement in like 2 weeks, 1 week. Oh, home loan sanction is within 8 hours, right? You hear slogans like that. The reality on the ground is extremely different. Reality on the ground is that we do all these things if all your paperwork is 100% in order, which is seldom the case.
Never the case.
So if you actually look at it, what happens is that in a home loan, almost 70% of the files are just sent back saying, hey, I need more paper.
wow.
Okay. And the sequence is like this. Even if I'm dealing directly with a bank and not, let's say, an intermediary or an agent, it's very simple. I go to a branch. The branch says, sir, loan ho jayega. And please give me this. You give all that to him. Then you call him up 1 week later. He says, I'll get back to you. If it's a PSU bank, the sad reality could be he's forgotten about a file. It's been lying on his desk. Or as a PSU bank senior guy said that, look, I'm running the corporate office for this city. I'm on the first floor. Ground floor has my branch. Sometimes it takes 2 months for the file to come from the ground floor to the first floor.
Wow. Incredible.
Right?
Yeah.
Now, people...
Well, I totally believe that, yeah.
But people know that, but look, it's an intractable problem because you don't even measure it, right? What's happening is the bank said 2 weeks because he measures it after the file is completely reached to the central processing center. What is happening is that the branch may just forget to send the file. What does happen is that even if the file has been sent, the central processing center says, for this particular case, I need more paper. And this is the paper set. Now the front end guy who's in the branch doesn't even know what papers are required. And that's how the banking works. Because
it's all human inefficiency, basically.
Throughout. And fundamentally, that's a problem that we solve. What we do is we have created AI-based technologies which allow us to remove those errors and get it right the first time. And that reduces the turnaround time. That essentially makes sure that our accuracy rates are far higher. Yeah. So it takes time for us to train the system. But places where we have trained the system, we have success rates in excess of 90%. 30% to 90%. That's the kind of change we have done. And we are able to track it right from the customer's doorstep until the loan is dispersed. Okay. Now, there's a bunch of digital supply chain that we have created around that. And we're starting to see results of that. So just last week, one of the real happy moments for us was one of the banks has actually sent out a circular to its centers wherever we are operational that we are a preferred partner. And we are a preferred partner because we get the file right the first time. Accuracy rates are so high. They in fact wanted to know how we are doing it. They came down to see us. And that's the first time we actually showed somebody outside our entire technology, and now they're saying, okay, why can't we buy this? License this technology. So, been a long journey, but I think this is the problem, that look, there's just too much happening. The front office and the back office are not in the sync. That's a problem that we're solving. And we picked up home loan as an area to solve, even though this problem exists in pretty much all banking products, because it's a tough problem to solve. And it's in fact so tough that when I started on it, we started out by saying that, hey, let's solve it for a very small case. So we actually started with electricity, knowing fully well that we want to go to home loan. We solved it for electricity. Yeah. Then we went to...
the name also played a fun connotation there then.
Yeah, we were playing on this entire thing that there was this electricity switching possible between Tata and Reliance.
Right.
And that's how we started. So we were trying to automate that entire process. And we did that, then moved to mobile, and then home loan was so difficult. Until that point of time, I was doing technology, thinking, hey, I can do this. But it turned out to be intractable, and that's where my co-founder Saurus, once he joined, he could solve it, because it's actually a very, very tough problem to solve. In fact, we looked up research and everything. This problem has been kind of seen as a very difficult problem, and several researchers have left it. But we've solved it at a level which is a lot of maths, a lot of AI. I think nobody, at least in Asia, is doing this. I can think of one company in US, two companies in UK which do this. But I think technology-wise, we are ahead of even those companies.
So you're basically looking at what? Applicants? You're going to applicants and saying, hey, this is what you need, and you get it right the first time.
So we essentially tell them, hey, you take care of your life. Your life should not get disrupted because now you need a home loan or you need to refinance your home loan. We'll take care of that for you. So we essentially advise you on all the papers and everything that you need. We help you select a bank and the product. Then it's my people who will do all the running around. And so that's something that we do across 4 cities now, in Bombay, Pune, Delhi and Bangalore. And we get everything done. So we ask you to come down to the bank for the final signature. Otherwise, everything else is taken care of us.
Nice. And it's all online, and most of it is tech powered.
Everything
apart from the last mile running around, maybe.
Well, you can't completely move everything online because there is a physical paper trail, right? So funny incident, I was talking to a senior person in banking, and what got from there was that they had done this entire massive implementation where everything was now digitized. So people will collect stuff from the customer, then go to the office and they'll scan it, upload it. And then everything's supposed to be online. What actually happened was people will come, they will essentially scan it, upload it. Then it reaches the person in the central office where he's supposed to do it. What is he doing?
Printing it out.
He's printing it out. No. He's scribbling notes on it. And
he's scanning it again.
Yes.
That's amazing.
And that's not one person. That's their entire team.
That's what digitization is.
That's what digitization
The
is.
paper moves digitally.
But gets printed.
But it's still paper.
Yeah, it just doesn't move physically. It just moves digitally and then becomes paper at the other end. They've just made fax. That's what they've done.
They have.
Yeah.
Wow. Okay, you build a system like that. You're right, and convert it into fax.
Yeah. And we have a state-of-the-art system.
Wow.
So that's the sad reality, because while you may want to invest, and banks do want to invest in technology, it's difficult to change people's behavior. And here is a particular way that this person has been kind of working at it, and he needs paper in that particular format because he's used to turning pages.
Interesting. But apart from that, apart from managing those people in the banking system who, if one day regulation allows you to bypass ever, then until then, everything else on top of that there can be solved by tech, and that's what you're doing.
So I think banks play a very, very important role, and that's where the regulation also plays, because they're deposit-taking institutions, right? And that's where the regulation is there to kind of protect them from, well, one more fintech company coming and doing stuff. And that balance sheet function is extremely difficult to kind of disrupt using technology, at least in a country like India, where there's no deficit on the banks. It happened in UK, in US, because there's a massive deficit of trust on the banks after the 2008-9 crisis.
Because they lent too much.
They lent too much, and after that they just were not lending. So there was a bunch of people who were looking for loans. They were not getting loans. Plus, there were a bunch of people who were essentially looking for returns. They were not getting returns. Like a decimal point as a return on your deposits doesn't count. Yeah. And forget that, even the stock markets were not performing. So a lot of people who got onto the P2P sites in these countries were essentially people who were looking the stock market kind of return. So instead of looking and saying, okay, let me put in some money in a NYSE index, let me go and put it on Lending Club. So I think that's what happened, and that's not been the story so far in India. People are happy to put in their deposit.
Yeah, they're happy with 4% and 8%.
3.5.
3.5 today, yes.
Yeah.
So
even if you go FD, it's what, 7.5 now?
Well,
or 6.5 now?
Yeah, depends on the
something
tenor.
like
Yeah.
Used to be 8.
But so I mean, I'm sorry, maybe I'm a little confused here, but even in India, like yields on property, in terms of like, you know, the kind of money that you can make on property, if it's just from an investment perspective, is really, really low right now, isn't it? Or does that not apply to your point? I might be a little confused here. I'm not.
No, so I think those yields are there, and given that, people are therefore not looking for those new instruments.
Okay.
Right, and that's where you will see that that entire kind of a thing that, hey, let me pull money out of my bank deposit and put it elsewhere is not there.
Okay. I flipped your point around. I'm sorry.
Yeah.
Okay, I get what you're saying now.
So therefore, banks are functioning well, even though there are so many of them.
Right.
You are happy with money being there. Funny thing here is this: I look at my office, and this is something that I tell people against. You've got your deposits in cooperative banks, and cooperative banks are known to kind of just lose their entire balance sheet and run to the government for help. But, well, people still continue to have accounts in cooperative banks. Something as simple as IMPS doesn't work for some of them.
Oh, man.
Okay.
Trust me, I have a corporate bank account. Cooperative bank account. It does not work.
Why do you have that?
It's grandfathered for
it's legacy. I have like some weird
legacy.
bank accounts which were opened like 30 years ago, and it's just there. But I mean,
so see, guys, that's the point I'm making, right? That money is probably unsafe. That money is certainly giving you some slight bit of pain, but you can ignore that and kind of move on. Yeah. So unless a customer decides to move on, banks are here to stay, particularly as far as that balance sheet function is concerned. So as an entrepreneur, therefore, I would rather stay away from that area at all.
Right.
So one of the things that I get asked by investors is, when are you going to kind of start lending from your own book? My answer is, I'm not going to. I'm not going to run a mortgage book. I don't want to. I'm happy being a technology provider. I'm happy being a service provider.
And that's to the existing stunted ecosystem of banking that it is. So in the hope that they will eventually stop printing stuff.
I'm actually happier saying that, look, instead of that happening 3 times, let me just do it 1 time. I think that actually saves more time, because a lot of technology solutions, as I pointed out earlier, see, look, if you've got a technologist who's kind of sitting in a room and trying to come up with solutions, you say that, okay, here is this process which is running, doing, let's say, 2 weeks. Let me take 3 days off this, because that is the commute time. So let me digitize stuff. And therefore you come up with solutions like, okay, let's do document imaging. But the reality on the ground is it's actually 8 weeks. Which you don't even know about. So I'm saying, okay, you know what? I'm going to solve the problem of bringing that 8 weeks that the customer is experiencing to actually to 2 weeks. Someone else may handle this 2 weeks to, let's say, 1.5 weeks.
Right.
Sure. Let somebody else do that.
Yeah, but then the other people in this space, like we were talking earlier, are doing whatever is the flavor of the season in terms of fintech, right? What's your take on all these other ideas which other startups are doing and which the places they're playing in? How strong an opportunity do they have in the light of all these inefficiencies still being in the banking sector and being regulated and protected?
No, I think a lot of them are doing very, very interesting stuff. So I think financial inclusion as a space, for example, is going to be the flavor for the next 20 years. That I don't think is...
like getting the unbanked into the banking system.
Unbanked into the banking system comes in. The newest flavor there is, of course, affordable housing. A lot of starts happening there and people are doing well. I think that's very important, and that will continue to do well. Today, I think the larger guys like HDFC and SBI are also getting into that game. Then let's come to kind of SME lending. I think that's again a huge pain point. And again, a lot of stuff is happening. And I think as more data moves online, better decisions will happen. And I think that's certainly an area to kind of work at and kind of give better solutions. Whether you do it from your own balance sheet or you kind of essentially channelize somebody else's balance sheet is a moot point. Again, on the personal data, payments, and all of those things, I think those are startups which have a lot of data, and now they need to find ways to kind of monetize that data, which is again going and saying that, hey, let me work with a few manufacturers of financial services and either sell loans, sell mutual funds, sell investments, sell insurance. So that's a change that they'll have to do.
Ultimately, it boils down to that, right? Because that is where, do you think even traditional banks use that as a point of strength? Like they also have had this data and they continue to have this data. But are they not able to monetize it as effectively as a startup would be able to? Is that the hope that these startups have?
I think that's certainly true. If I think of a few that just pop in my head, yeah, I think that's true. And I think those startups will be right in their assumption, because essentially a bank is relying less on utilizing that data efficiently and doing a lot that you can actually do with that data and doing it in an automated fashion. I think what they're doing is that you're making it available for the relationship manager to do things. The minute you do that, you can bring a lot of variation into that. One great guy will do a whole lot better than what the technical system will do, but 10 not so good guys will probably do a whole lot of worse. So I think average wise, it's I think the apps which will end up doing better job of selling that insurance.
Yeah, and that's essentially what, I mean, a lot of the story is going to be in the next few years, I guess, seeing how fintech rolls out. It's still going to be obviously a very hot sector. People are, whether across all the individual solutions which you mentioned, where do you see what you're going to go with SwitchMe, and how do you see this growing into?
Are you going to go back into like the mobile and the electricity and all that kind of stuff? Or is this, are you now like, is banking the home loan thing, is that like the core this or?
So we always wanted to do home loans. So that was a via media of kind of developing technology.
Right. Yeah, I feel like the same problem that you're talking about with home loans exists in mobiles, right? There's no transparency on plans and stuff like that. And that feels like an easier kind of customer get than a home loan customer get, right?
That is true.
But I don't know if the technology applies. Is that it's just kind of, your name is SwitchMe, right? So
So today we don't only switch loans, for example, we do new loans as well.
Okay.
Fairly significant part of our business, and I think we will continue to do just home loans because I think there are so many problems to still solve in home loans, and I think that's something that we'll go deeper into. And in terms of our own plans, I think while we kind of build this platform out further and volumes are kind of increasing every month, in addition to that, we'll start licensing to banks, because the way to look at it is this, that let's say I'm providing customers to State Bank of India and there's a small fragment of certain share of market that I have where I'm providing this superior experience to the customer, but there's a much larger share which is not experiencing this. So I think as a team we are obsessed about kind of making that transformation happen, right? Where the experience of taking a home loan becomes so much easier. In the home loan system, I think the experience hasn't changed for the last 30 years. And we want to transform that. And the bigger transformation will happen if I give my technology to these guys and there's a transformation that happens on that side.
They run with it.
They run with it. And that's also a good business model.
Yeah, of course it is. Licensing is the best.
Yeah, and I think we'll do that as well.
Yeah, makes sense.
Nice. And obviously, like we were talking earlier, it's all in the same wave of economic growth that the country is having. So more growth means more retail, means more buying homes.
More buying homes, yeah.
And
actually, it's a little more than that. So look at this way: that you've got an SBI or an HDFC. Today they are saying that my average loan size is for one of them is actually 29 lakhs. Now he's saying that I will go after affordable housing because Prime Minister has said so. Now the affordable housing is at 10 lakhs.
Yeah.
Now, in order to cater to that segment, you need to cut your cost by 1/3 or 2/3.
Yeah.
So cost has to be 1/3. Now,
So then
risk has actually gone up because that's a sector that you don't even understand, and more irregular incomes there, right? So you cannot really cut down on the work that you're doing on the underwriting side. At the same time, you have to cut down on your cost. How do you do that?
using technology.
efficiency.
Yeah, like what we are doing, right?
Yeah.
And once you do that, then you kind of expanded what is a formal sector, right? And I think that's what the power of technology is, that let's get to the next segment. And once those people have money, they spend.
Then one more.
Multiplier effect of economy takes off.
Yeah. I think that's the story that's why fintech is hot and it's going to continue to be hot. So let's hope to see a whole bunch of more innovations, and let's really hope to see banks embracing more tech to become a little more efficient than just faxing paper. So great. Thanks so much for being on the show, Aditya. I think, I'm always interested to talk fintech. I think there's so much to be done, and I think you're doing a great job along with the rest of your team. So it's great to hear insights. That's our show. Amit?
Yeah, just a quick reminder to everybody, Slack channel, come to the website, ivmpodcast.com/Shunya1. There's a big button over there saying subscribe to the Slack channel, send us your email address and we'll add you into that. And besides that, please do reviews and stuff like that, reviews, ratings, whatever you can, whatever platforms you're listening to. iTunes ratings are particularly helpful, so anybody listening on an Apple phone, please go to iTunes and give us a rating and a review.
All right, so that's it. Aditya, you're on @Aditya Mishra on Twitter. I'm @Shiladitya, and you're @Doshi Amit.
Yes,
The simplest Twitter handles to remember. See you guys next week. Thank you.
Good evening, ladies and gentlemen. This is your captain speaking. Sorry to say, but there's been a slight delay due to the apocalypse having suddenly begun. As you can see, there's death, destruction, and chaos taking place all around us. But don't you worry, food and drinks will be served shortly, and I would recommend checking out
IVM Podcasts
to get some of your favorite Indian podcasts. We'll keep you going till this whole thing blows over. Thank you.